So then, did all that talk of investing in agriculture pay off for African economies in 2014? That's a question we hope to answer in the next half hour. Hello there. Welcome to this edition of Global Business Africa. In the next half hour, as usual, we'll have a speed run through all the key business news stories, trends and ideas you need to know about. I'm Ramanyang in the Kenyan capital, Nairobi. Here's what's coming up. The Ghanaian Cedi and Zambia's Kwacha, the worst performing currencies of 2014 in Africa. We'll have the details. And the IMF is still under pressure to cut the debt of Ebola-affected countries. Let's start in the currency markets. At the close of 2014, just about 24 hours or so ago, Ghana's Cedi and the Zambian Kwacha were the worst performing currencies in Africa of that year. They were battered by a combination of falling commodity prices and, in Ghana's case, fairly questionable fiscal policy. Now, the Cedi ended 2014 27% lower against the dollar. Ghana's economy, of course, faced a triple whammy of declines in gold, cocoa and oil prices. The currency had actually fallen by around 40% earlier in the year, but a combination of a successful Eurobond issue, an incoming cocoa loan and talks with the IMF about a bailout program helped it to recoup some of those losses. Zambia's Kwacha closed the year amid tax rows with mining companies over VAT refunds, lower growth and a looming election that's taking place this year. Commercial banks quoted the currency at 6.375 Kwacha to the dollar on the 31st of December. At those levels, its losses in the last 3 weeks were 3% and those for the year as a whole, 15%. The Naira was another poor performer in 2014. It ended the year having lost 13.5% to the dollar. The Rand was over 10% weaker in South Africa. The Kenyan and Ugandan shillings, however, were down by about 4.5% and 9% respectively. Now, 2014 was also the year in which oil prices fell to their lowest level since 2008, partly due to oversupply from the US and weak demand from the European Union and China. On Wednesday, Brent crude futures were down to a 5.5-year low of about $57 a barrel. In late November, OPEC opted to maintain the exact same output target of about 30 million barrels a day, despite the global supply glut. A fall in oil prices has battered currencies as diverse as the Russian ruble to the Nigerian naira. It squeezed government budgets, especially those in oil-dependent nations like Angola, Ghana, Venezuela, Ecuador and Nigeria. But for net oil importers like Kenya, Uganda and Egypt, they're benefiting from the fall in oil prices. Let's move away from commodities now. The International Monetary Fund is under pressure to cancel the debts of Guinea, Liberia and Sierra Leone, the 3 West African countries hardest hit by the worst Ebola outbreak in history. Now, the calls for debt cancellation are coming from anti-poverty organizations, representatives of developmental organizations like the United Nations and the US, the IMF's biggest single shareholder. Growth in all 3 economies has stalled following the outbreak, cancelling about a fifth of the $480 million worth of debt owed by the 3 countries will free up part of their respective government's cash flow to jumpstart economic activity once again. To date, over 7,000 people have died in the outbreak. Now, 2014 ended with a lackluster performance at best from the South African economy. The Rand was relatively flat against the greenback in Wednesday trading, but in 2014 as a whole, it was down 10%. Africa's most advanced economy only just avoided recession in the second half of the year. However, as Guy Henderson reports, it wasn't all doom and gloom. 2014 also had a few success stories.
Bill Harrop is a stickler for timings, thoroughness and a rather eccentric sense of humour.
Oh, Shambhala, okay, yes.
Seems to have been a successful recipe for business. Right on time for sunrise, and Bill insists every silent skyscape has been different since his maiden voyage in 1981.
I got a halo. Oh, look at that. Sorry, can you get that? Can you get that?
Back then he charmed mostly foreign visitors, but most of the passengers here are local. Bill believes that's just as well. Those coming from abroad are suddenly scarcer.
This year they have levelled off. They haven't increased. Luckily, I have a business that is growing nearly all the time. Occasional dip, but most of the time it's a growing business. It's a solid business, has a very good reputation, a very strong brand. So we are fortunate, but I think some other companies probably have suffered.
That might seem odd for a country so rich in attractions. Several tourism associations say they've had cancellations across the board because of the Ebola virus. That's despite the nearest case being a 500-metre vertical drop, and then 5,822 kilometres north across at least 12 national borders. Now, the weakening rand means that international tourists can get a great deal taking a holiday in South Africa, and so that is propping up the numbers to some extent. But all the same, 2014 has seen a significant dip. Tourism's not the only vital sector that's taken a hit. Global commodity prices have slumped. Coupled with a 5-month strike on South Africa's platinum mines, the country only just avoided recession. The public purse is increasingly tight too. Pressure for solutions has brought long-term ideological differences to the fore within the ruling alliance. One large workers' union has been expelled. Some economists believe the instinct to protect national industries has, in some cases, proved counterproductive.
Yes, there's a place for labour union. There is, and there's a place for regulation at the same time. But we need to compete with economies where labour is dead cheap, and they are importing goods, for example, in the textile industry, that is literally destroying our own industry.
On a small scale, each sector has its exceptions. Take this handmade hat company based in Johannesburg, offering a product that avoids the foreign competition. Not mass-produced, but handmade, and aimed at those prepared to pay for locally sourced quality.
Are you ready?
Oh, sure.
Like Bill and his balloons, it's something unique, and it's found success in 2014. But these are niche markets, overshadowed by a wider malaise that looks likely to continue in the new year. Guy Henderson, CCTV, Johannesburg.
Away from the African continent, China started to implement a more relaxed, shall we say, policy on foreign banks. New rules introduced to ease market access for foreign financial institutions are now officially in effect. And some analysts say these regulations will help to open up China's domestic banking sector. Wang Yiqiang has more.
China has widened the opening of its financial sector by relaxing controls over market access for foreign banks. New rules no longer require specific operating funds to be transferred from foreign banks' parent companies overseas to open new branches in China. And it's up to the foreign banks or Sino-foreign joint venture banks to decide whether to set up a China representative office before the establishment of a Chinese branch. In addition, China will also allow foreign banks to apply to conduct RMB business more conveniently. Foreign banks can now apply for such business if they have operated in China for at least a year, down from the previous 3 years. China had 42 locally incorporated foreign banks by the end of 2013. The assets of the foreign banks amounted to 2.56 trillion yuan. That accounts for only 1.7% of the total assets in the Chinese banking sector. Analysts say the revised rules will prompt more foreign banks to enter the Chinese market and further stimulate the offshore RMB market. Wang Yiqiang, CCTV.
About 10 minutes in, let's take our first break. Here's what's coming up. South Africa's biggest mobile firm acquires the country's main fixed line operator, Neotel. We'll be speaking to the CEO. And we'll be looking at the investments in agriculture and if they paid off for Africa in 2014. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome welcome back to the program. You're watching Global Business Africa from the Kenyan capital, Nairobi. Now then, let's head over to South Africa. Vodacom, that country's biggest mobile operator by customers, is expanding its operations. It's acquiring the country's second fixed-line operator, Neotel, for $700 million. Neotel is majority owned by India's Tata Group. It has spent billions on its infrastructure. It's also the only telecoms company in that country that has direct Tier 1 access to all 5 undersea cables that land in South Africa. Samita Naidu caught up with Neotel CEO Sunil Joshi to talk about the company's future.
Do you think that Vodacom is the right fit? Did you not consider maybe MTN? Because MTN, of course, has a bigger spread across Africa.
The industry is going through a very interesting phase of consolidation. Businesses are trying to establish, while the competition is increasing, how do I make sure that the profitability structures are managed as well as the costs are managed. And I think the thing in the telecommunications industry, it's also about scale. And it's about taking the capabilities that one has and what sees growth in, and acquiring the necessary capabilities or building. We believe that the combination of the Neotel capability and fixed infrastructure and our business-to-business focus, as well as our spectrum, can get greater support when merged or being part of the Vodacom group, because it will offer far greater products and services to our customers and a greater choice, but also enables us to leverage the fixed voice convergence that's kind of changing business models around the world and in South Africa. I think it's great for South Africa because it will enable scalable businesses to continue to bring down costs for the customers, but also bring better products and services for them.
The bulk of your business is looking at the business client, so you're not necessarily looking at your individual retail customer. Would this change once you go into Vodacom, or would that be the fit? When you enter Vodacom, they would take care of the individual consumer and you would continue with taking care of the business client.
Yeah, I think that's going to be something to be agreed upon once the transaction is approved. But you're absolutely right, about 95% of Neotel's business is serving the B2B customer. About 40% of that is Neotel serving other service providers, not just Vodacom, but the likes of MTN, IS, Cedi, etc., which is part of our business model. But we also do have about 220,000 small enterprise and retail customers that we do serve. And Neotel's been growing almost both segments equitably as we have seen our growth.
We want to get South Africa to a level of international international standards, and right now South Africa is not there. But considering the demand and considering the amount of investment that you've put into laying all of this infrastructure, why are we still not there?
Well, it depends on what you see South Africa as. So Neotel has a lot of its infrastructure now in the top 5 cities. So in Joburg and Pretoria, Gauteng that is, Cape Town, Durban and Pietermaritzburg is where we have infrastructure. Unfortunately, we don't have infrastructure right across the country because we've invested over 6 billion rand in just fiber optic infrastructure in South Africa so far, and we've got this far. And wherever we are able to deploy fiber, we're also now combining it with wireless capability. So I may be able to connect a certain number of customers over a fiber footprint where I'm not as close. We deploy the fiber optic infrastructure, the wireless infrastructure for us to connect to the customers.
We're still in telcos. Kenya's biggest telecommunications operator, Safaricom, plans to transfer its M-Pesa service from Germany to Kenya at the start of April this year. Now, the ongoing installation of M-Pesa servers locally is expected to end nearly 8 years of foreign hosting, which has been at times blamed for the delayed response to service interruptions. Safaricom CEO Bob Collymore says the new M-Pesa platform is currently in beta testing and that will end by March. The relocation will minimize service outages if it all goes according to plan, which tend to occur whenever the undersea fiber optic cables that relay information from Kenyan clients to the servers in Germany and back are damaged. Local hosting is also expected to cut costs for Safaricom, which will now be in charge of maintenance for the system on its own books, as opposed to the current setup where it actually pays Vodafone, its biggest shareholder, to maintain them for it. Now, boosting investment in agriculture and finding alternative ways of raising government revenues. These were key focus points for most economies in Africa in 2014. However, the combination of civil conflict in some places, a rise in the frequency of terror activity in others, and of course the worst Ebola outbreak on record, all these things combined to overshadow some of the developments that had been made. On What's Hot Tonight, Mahia Mutua has a brief analysis of some of the economic trends that made headlines or not last year.
The International Monetary Fund reckons that Africa is taking off with strong, steady growth, but the positive outlook looks grim considering the slowdown in advanced economies like the European Union and China. South Africa, the continent's most advanced economy, shrank in the first quarter of 2014 as mining output fell sharply following a 5-month industrial action in the platinum sector. The situation had economists predicting recession and highlighting the exposure of the country's feeble growth to over-reliance on commodities. South Africa's growth was said to be so fragile that even one relatively small sector of the economy could tip the whole country into recession.
Outside of the issues relating to the strike, we do have other structural issues that have been with us for quite a while. That in order for us as an economy to reach a higher level of growth, sustainable level of growth, that we need faster investments, that we need to improve on our skills complement, that we need to have greater flexibility in the labor market, and all of these things that need to be brought to bear. And I think the challenges, the correction that has to take place there is gradually unfolding.
Elsewhere on the continent, several African leaders chose to focus on agriculture as the real driver of economic growth. Despite being endowed with a quarter of the world's fertile lands, Africa is home to over 200 million hungry people. The Food and Agriculture Organization says that agriculture is the only sector that can absorb Africa's growing workforce over the next 35 years, but poor transport and infrastructure are among the factors holding back growth in the sector.
We definitely have to transform the agriculture sector. And unless we do that, economic development on the continent will be undermined, because we know that it is the agriculture sector which has the high potential for employment. We have got to tap that one. It is the agriculture sector which is going to provide or be a springboard for industrialization.
Sudan, prized for its fertile land and easy access to irrigation water from the Nile, has been trying to attract investment like Gulf Arab firms seeking to secure food supplies for their arid oil-producing countries. The country wants to prioritize agriculture to target self-sufficiency by 2015.
The direction, as I said, is food security for Sudan and the coming generation. At the same time, to provide fodder for animals to help improve milk supply. Thirdly, the issue of hard currency, which we can save from this land and water if utilized properly.
While Africa sought to boost economic activities to raise revenue and increase self-sufficiency, experts say the continent lost billions in illicit outflows. This was more than the overseas development assistance it received.
The continent is losing at least $50 billion a year through these illicit outflows, which is in fact larger than the amount of overseas development assistance that the continent receives. Now, this is capital which is generated within the continent, belongs within the continent, but then leaves by these illicit means.
As the year came to an end, analysts focused on the economic impact of the Ebola outbreak, which claimed the lives of more than 7,500 people by late December in Guinea, Liberia and Sierra Leone. At the time, the World Bank revealed that the epidemic would cost more than $2 billion across the region, causing once booming economies to slow down. At worst, Guinea's economic growth could be reduced to 2.3% next year, while Sierra Leone's growth could be cut by 8.9%, while Liberia will experience a reduction of 11.7%. Mahia Mutua, CCTV.
Not much to tell as far as commodity prices are concerned. Brent crude still under $60 a barrel, down about a percentage point or so. These data is about a couple of hours old, but 57.33, the indicative number, as long as that supply-demand imbalance remains. Well, these are the numbers we're going to be dealing with at least for the first quarter of 2015. Next, we'll be reviewing the tech trends that made 2014 what it was. And we'll introduce you to another first in over 20 years, a soda-producing plant in Mogadishu.
Having lived in 4 different African countries and with a diverse background, I cherish the personal as well as professional experiences I've had across the continent. It's this understanding of the place I call home that drives me to tell stories about its people, its needs, present and future.
There's just so much happening in Africa in terms of the way forward and development. It only brings positivity.
My place at CCTV Africa is about creating awareness around the realities of a continent that is indeed complex, vibrant and has great potential.
Africa is my home. How it prospers, the challenges it faces, its people all matter to me because this is my future. I'm Famida Miller and I'm a reporter and anchor at CCTV Africa.
Hey there, 22 minutes into the hour. Welcome back. 2014, fairly big year for tech companies in more ways than one. Everything from Apple's latest iPhone, and of course they're making an enormous supersized one that under Steve Jobs was probably not going to happen, to the Apple iWatch. There have been some fairly interesting additions to the goods and services that we use on a daily basis. Now, on the first day of 2015, CCTV's Mark New takes a look at some of the biggest tech trends of 2014.
I'm here in Cupertino, California, where you can see right behind me the headquarters of the company that made the biggest impact in Silicon Valley in 2014, Apple. In September of 2014, Apple finally released its long-awaited, larger-sized iPhone 6 and 6 Plus models, officially entering the phablet arena. That's a combination of phone and tablet. iPhone sales were a huge success, providing a jolt to Apple's stock, but also raising questions as to what's next for the iPad.
Once people get used to using a larger phone, it's hard to go back to a small phone. This is another challenge, quite honestly, for the tablet market. One of the challenges we're seeing is that once people get a large phone, their need to use a tablet goes down.
But some analysts say it was another service introduced that was even more important, Apple Pay, Apple's mobile payment platform that stores credit cards and processes charges.
That's it.
And after years of mystery surrounding whether the iWatch was a rumor, Apple finally unveiled the Apple Watch. It's expected to hit the market in early 2015, but it faces an already crowded field of wrist offerings from Intel to Motorola to numerous startups like Pebble. Wearables also go hand in hand with the exploding market of health and fitness tech. The ability to measure your heart rate, your sleep, your relaxation states, and even your skill at dribbling a basketball all became realities. One major reason for the influx of tech gadget choices is one of the biggest stories of the year, crowdfunding. At no point in history is there a better opportunity to build an expansive piece of hardware and get the money to make it happen.
Crowdfunding platforms have enabled a route to pitch your idea to the end customers, and not only do you get pre-orders of that, so you get customers out of it, but you get validation from the market, which in return investors will look at and say, wow, maybe there is really demand for this.
Finally, this year saw Silicon Valley tech companies being valued at prices some say are out of control. Twitch, the company that allows video gamers to stream their game-playing feats, was purchased for nearly $1 billion by Amazon. Facebook bought the popular texting app from Mountain View, California, WhatsApp, for $22 billion. And now investors are valuing San Francisco headquartered ride-sharing company Uber at $40 billion. An abundance of capital and ideas continues to help Silicon Valley lead the world in tech innovation. I'll be here following the events and what's next in 2015.
Now then, as we wrap up the bulletin, let's remind you of a story we did a little earlier in the year, where a group of Somali nationals from the diaspora went back home to set up the country's first soft drinks firm. Tonight on Grassroots, we revisit their story. It saw them combine a South African brand with locally grown inputs to create their own unique soda flavors.
This is a soda factory in the heart of Somalia's capital, Mogadishu, with a distinctive South African flavor. The Soda King factory is the country's first soft drinks industry to set up shop. Ahmed Guled and his business associates bought the franchise from South Africa after returning to Somalia from the United Kingdom. At a startup cost of $1 million, it now distributes various flavored drinks and bottled water to customers throughout the city.
Yes, we have decided to run this business in order to fill the customer demand. As you know, Somalia, there's no enough factories and there's no production. Usually the production is coming overseas, especially in the Middle East. That's why we decided to start this business. Of course, there are some challenges here. As you may know, the security is not as we prefer. There's no supply chain for the factories and so on. But still, we can manage to continue this business.
For more than 2 decades, Somalia was engaged in fighting a bitter civil war and then fighting Islamist militant insurgents. But a recovery process is now underway. The government is encouraging more investors to drive the economy and create jobs. The Soda King factory has around 30 employees.
My life has totally changed since I started working for the soda factory. Somali expatriates and locals have made huge investments in the country, and there is good progress.
The company uses locally available fruits to produce the drinks and makes up to 8,000 bottled drinks per hour. There are also plans to expand and double the output in the next year.
We have very different quality of productions, and we are the only plant or only factory who can produce up to 13 different soft drinks. Therefore, most customers, they prefer to buy from us because we are a one-stop solution.
Other businesses in Mogadishu are also growing. Hotels, restaurants and shopping malls are opening, giving Soda King an opportunity to market its products.
The sodas are in demand because they are local products. Everyone likes to take locally made drinks.
A more stable outlook has helped boost the Somali shilling by some 80% since 2011 to around 18,000 to the dollar. Guled and his business partners are among many other innovative Somalis who have taken advantage of the relative peace and stability that now flows in the country. Voldi Karolsa, CCTV.
All right, then a quick run through the currencies here for you. Not much change because, of course, there wasn't a lot of trading in some of these currencies over the new year. However, the Kenyan shilling essentially remaining around the 90.50 mark. We're going to be interested in seeing exactly how that evolves as the New Year's trading starts to pick up. The Naira is still, of course, well above the central bank's target band. 183 was the number in question. And that's it for this edition of the program. Do remember to send your feedback to globalbusinessafrica@cctv.com. We'd just like to hear what you think about what we do around here. And of course, when we're off the airways, Facebook and Twitter are your ports of call. We'll see you tomorrow. Thanks for watching. I'm Brahmanyana.